And looks like we are live on Facebook. Are we? Let me check very quick. Yes, we are. Okay. How you doing, everybody? This is, Pavel again with Nexus Realty, and I just wanted to introduce our guest today. This is Ilya Koshenkov with Cornerstone Mortgage. Are you with Cornerstone or somewhere else?
How you doing, everyone?
Yeah. Looks like you are with a Cornerstone, right?
Yes.
Okay, I always keep forgetting which company you're with. I've known you for so many years, and this person is an amazing mortgage broker, and how amazing he actually helped me personally finance my property several times. So I can vouch for this guy, and I just wanted to bring him over here because we have a unprecedented time here. So just wanted to bring you over, and you could share as far as what's going on with in the world of home financing. As you know, the pandemic kind of started, and people were freaking out. So how did this affect the real estate industry, as far as not exactly real estate, but the mortgage industry? Just wanted to bring you over, and you could share.
It has affected quite a bit. I mean, volume-wise, we're actually, I think, experiencing one of the greatest volumes because there's a refi boom with the pandemic. I mean, it just kind of all happened at the same time, but the rates are still very favorable, and all the lenders are really, really busy. Some banks take anywhere from 4 to 5 months to get a deal done.
So what I know that a lot of people, especially those who know, who have it in the back view, in the rear view mirror, 2008 crisis, they looking at this in the same way, and they say, "Hey, this is basically sky is falling." What are your thoughts about that? How is this different from 2008 mortgage crisis, or is it even different at all?
Yeah, in 2008, banks were just shutting down. I mean, you'd price a loan, and I was just getting started in the industry at the time, probably worked there for 3 years, but
yep.
Banks were, like you price the loan, and then you even lock the loan, and then by the end of the day, you're told you can't get a loan done. I mean, it's totally different now. I mean, some of the higher price loans, they call them jumbo loans, they have gone away. They phased out for X amount of weeks. We're finally getting those jumbos back now. Some of the investors are willing to take the risks, and there's overlays.
So
and
for those
like
people who are new to this, who do not know what a jumbo loan is, could you explain what a jumbo loan is, and how is it different from a regular conforming loan?
Yeah, a jumbo loan is basically a private investors' money, pool of money that is applicable to those folks that are trying to get loans in the high $700,000 to $800,000 range. Anything in our state, and actually in Kings, Snohomish, and Pierce counties, anything up to 741 loan amount is either a conforming or high balance, which is backed by pretty much by the government.
So let's say if I want to buy a house,
it's a lot easier.
Let's say I want to buy a house that is about $1 million, which is a typical here in Kirkland, Bellevue, Redmond area.
Yeah.
And the loan, the max I can get, conforming loan would be 740, right? So the rest has to be my down payment. Correct?
Correct. That's one of the ways to do it, ideally. Or you could break your $1 million purchase if you don't have the full 20, in this case 25% down. You can actually break it into 2 loans. You can do maybe 740 for the first one, and get like a piggyback second for $50,000 to $60,000. You can still get away with putting 10% down. It is still possible, but
okay. So my understanding that since the pandemic hit, a lot of banks were they given any money by the government by any chance? So what's the story there?
Not that I'm aware of.
So the money is still around, but the money is still available, right? It's not like there's a mortgage crisis and the price is going to go down because nobody can get a mortgage. Is that what's
correct? Yeah. The only difference I've noticed is related to self-employed borrowers. Before the pandemic hit, we were just and it really didn't matter which type of financing you're getting. But we were just basically concentrated on getting 2 years of tax returns verified, determine what the income is. Now they're literally looking at what is it currently that you're making. Please give us a bank statement. Well, we want to see the deposits going in as of this moment. That's really I think the biggest struggle at this moment.
Looks like we have about 25 people watching us right now, 27. So feel free to ask questions, guys. Feel free to jump in and ask a question, and we'll be happy to answer it. Just type it in the you know, right here in the, and we'll answer the question. You know. Okay, Ilya. So what are the current FICO requirement or credit score requirement for somebody to own a house? Like, let's say somebody's a first-time home buyer. How is that going to work for them?
Yeah, after the pandemic, and I think it's a risk it's a risk base on the companies. We have raised our bar from 580 to a 620 minimum.
So it has to be 620, right?
620 is the minimum, yeah.
Okay. Somebody's asking, Alisa.
We'll get you into an FHA loan.
Alisa is asking, can you talk about rates and transfer rates?
Rates and what?
Can you talk about rates and trends for rates?
Oh, okay. Sure. Rates and transfer. I see the question. Yeah.
Yeah.
While the rates are still at all-time lows, I think they have gone up a little bit in the last couple weeks. I would say we're talking anywhere from 3% to 3.6 on average, depending on the loan product, FICO score, down payment requirement, things like that. But as far as the trend goes, I mean, the last 10 days or so, they have gone up a little bit, within about 0.25%.
You remember, we'll also have somebody's asking, what is the current 30-year conventional rate? Aziz is asking, what is current 30-year?
It's hard to say. It based upon a lot of factors. Again, conventional loans is probably going to be in the 3.25 type deal.
3.25?
Yeah.
Okay.
Like that.
You know, like when the Feds reduced the interest rate to 0, everybody started like freaking out. Oh wow, now I can just take free money, and that's not the case. Usually, that just simply means that you know, you can the bank can borrow money for free, basically, from the Fed.
Sure.
Yeah.
Yeah.
So why isn't it
will give you a 0%
so the typical
rate.
question, the rates haven't changed much. Before it was possible to borrow for you know, at a lower percentage than right now they can borrow for free. So how come the rates haven't much changed for the consumer? What's the story there?
That's a great question. Everyone in the banking industry is asking the same question, because all these graphs show to be the rates, they should be a lot higher, and then we have a sign of coming up inflation, and the rates are still kept very low. I honestly don't have an answer to that question.
Got it. Okay, so let's say somebody wants to buy a house right now, and that person is, you know, self-employed, let's say, and how can this person, you know, go buy first house? How is it possible for somebody? And what's the typical down payment required?
You can, so self-employed, whether you're self-employed or not self-employed, the requirement would be the same, at a very minimum 3 to 3.5% down payment, and that will determine if you go conventional or an FHA type of loan. For VA buyers, there are some VA buyers that ex-military or current military that are self-employed. They can still get loans at 0% down. It's just, like I say, the caveat became after the pandemic, that we not only have to verify and go off of the 2-year tax. I'll give you an example. I think it'll be easy. I had a loan in process. As a matter of fact, it was final approved. We were getting ready to have the documents to go out to the escrow company. And because they do, before the documents go out, they want, within the 7 days before the docs go out, they're doing the final verifications of income. And this particular family, one of the people was working Uber, and we know that Uber and Lyft had both stopped. I mean, the demand was just too low. Underwriters saw that bank statements produced $5 weekly deposits versus $500 weekly deposits in the past. The loan was declined at the documents sent stage. So
Wow.
that was the first couple of weeks of the pandemic. I think the underwriters were taking extra cautious steps, but it did happen to one of my families or one of the
So
families.
right now, I mean, I understand that the requirements are a little bit stricter on employment status, and the
Yes.
verification of employment actually goes on all the way until almost closing, right?
Yes. Yeah. Yeah. We keep on asking the pay stubs or self-employed borrowers. I have one
Hmm.
particular now. I keep asking her, show me the deposits that you've made that were generated by your business. So, and then it could be a Venmo deposit or PayPal. So underwriters want to make sure they cover their behind when granting that loan, and
Of course.
make sure that the loan doesn't come back and go into default in the next couple months.
Makes sense. Exactly. So, but anyway, if let's say if you're sorry, if you are an essential worker, or if you just basically have a job and nothing really much changed, you can go ahead and apply for a loan, and you can actually buy a house, pretty much, right?
Correct. Yeah.
Yeah.
There's no difference except for, like I say, extra pay stubs needed or extra proof of pay that you're getting pretty much all the way through the closing.
And that's correct. As one of our employees right now in contract, and you're doing the loan for this person, which I can attest to that, yes, it is possible. And as long as your job, still there, if you're not laid off, then you should be okay. A very interesting question comes up. You probably heard about PPP. How does that affect if, let's say, the person is still on payroll but not actively working, but the employer keeps paying that person from the PPP funds? How do banks look at that as far as doing the financing?
So is that employee furloughed then?
It's not furloughed, but it's basically the person still on a payroll, but just not going to work, but still keeps getting a paycheck because the employer received Paycheck Protection Program funds from Small Business Association. And, basically the employer is paying from the PPP funds, but nothing really changed for the employee.
Right. I think that would be fine. Again, we look, I mean, all lenders, I probably would say all lenders do the same process. They go through the same process. We not only collect the latest pay stubs, we also do pretty much 7 days. It's either 7 or 10 days before the closing last verification of employment. And as long as the employer verifies, that this particular borrower is still employed, I think that'll be fine. We don't really, we don't get into niche where the money is coming from, whether it's from
Okay.
or the budget.
All right. So basically, as long as the paycheck is there to show, that should be fine.
Yeah.
We have a question here. What about debt to equity ratio? Has it changed?
That's
Probably talking about the LTV.
I would say probably debt to income ratio. No, well, for some of the products, so hang on a second. Let me just pull something up really quick. I can't, for some reason, I can't open this, but so I would say in general, it did not change. We can still go up to, 45 ideally, 50% for some of the loan programs. Debt to income ratio. However, state of Washington, if someone was to get a down payment assistance through them, not only increase their bar on the FICO score, I think it's 640 minimum now, they also have decreased the debt to income ratio down to 45%. But at the same time, our company has decided that we're suspending all the down payment assistance programs at this moment until further notice. So that's why I haven't been in touch.
So you don't have a down payment assistance right now. I understand that some people were able to buy without any money down. So it's not because they were getting a grant from Washington State. So that's no longer the case. That's correct?
Correct. Yes. From my understanding, is state of Washington is still operating. They still grant those loans. It's up to the lender to accept it or not. And I know a lot of lenders have suspended the receipt of those gift fund or the down payment assistance funds.
It looks like I know you had some slides you wanted to share with us. Is that right?
I did, but one of them that I think was going to be very applicable for some reason is not opening it up.
Okay, got it. That's okay. Well, so the question another I have: what about for multifamilies? Would my multifamilies be the same?
Multifamily meaning duplex, triplex, or fourplex?
Yeah. Let's say somebody wants to buy multifamily home.
Same thing. It's the same thing. Nothing really has changed. So as long as there's income, as long as we can verify it, it sounds too good to be true, but it is what it is. I mean, the pandemic has really, the only change that has happened through the pandemic is the extra cautious requirement on documenting the income. That's really.
But what about the down payment? Have they raised the down payment requirements for a lot of properties or no?
No. You can still get it with as little as 3% down.
Okay, so you can still get a 3%, right?
Yeah.
Okay, and that will be for the FHA, right?
FHA is 3.5. Conventional loan, you can get it with the 3% down.
Okay, that's pretty good. That's pretty good. So basically, the down payment's still the same. The credit score is almost the same, but it's just a little bit up, right? It has to be a little bit higher.
Yeah.
And the requirement for employment status has basically changed, which makes sense because they want to make sure they loan to people who are able to pay back, which means they have employment. What about the fact that we know a lot of people now ask for forbearance?
Mm-hmm.
How is that going to affect them later in their like refinance or future purchases whenever they ask for forbearance due to COVID?
That's an interesting topic. From what I've personally seen two people trying to get a loan for refinance, and then they've asked for forbearance. And I don't know if they didn't follow up or the banks made mistakes, but both of these people's credit got affected. When I know that banks, when they offered the forbearance, they all said that you wouldn't have any issues with your credit. But in my particular case, two separate families got affected. Their credit scores just got impacted, which made it impossible for them to qualify for a refinance at this moment.
Wow. So just keep that in mind, guys. If you are asking for a forbearance from your current lender, make sure that you have an understanding, mutual understanding with the bank that there's not going to be negative impact to your credit score. Because if they reported this forbearance, chances are you may not be able to get a refi or may not be able to qualify for a home loan, right?
Yeah. And then if the forbearance goes well, where the bank follows all the procedures, does not make any mistakes, and actually reports it as a forbearance, again, I may be wrong, but I think my understanding is you have to, after you come out of that forbearance, I think the waiting time is 1 year before you do anything.
Okay, makes sense. And also, so okay, we addressed the forbearance part. How did the refinances change recently? Let's say somebody wants to get to a lower interest rate.
So with the, you mean with the COVID-19?
Yeah, exactly.
Same rules. As a matter of fact, I'm doing a lot of refis now, and COVID-19 has no effect on the appraised values. I haven't seen any appraisals that came back lower. As a matter of fact, I'm getting a lot of what we call appraisal waivers. So when we run it through the system, and the system generates, we plug in a value, and the system confirms that it's okay to have this value. So then there's no appraisal is needed. So not only it saves on the time a little bit, not to do, so it's also a cost saving of anywhere from
And looks like we have a follow-up question here from Pavel Maltsev. Has someone, how someone can know if it's a good time to refinance? Is this all about a rate difference? What's the downside of refinancing?
Great question. Good time. I mean, if it makes sense, certain families even take higher rates because maybe they have a lot of debt and they want to consolidate. That may be a good opportunity for them as well. As far as the downside, again, it kind of all depends. If you've been paying for 10 years at a, say, 4% rate, and you can get 3.25% now and get back into a 30-year loan, it may not be the wisest decision you want to do, because your time would start at day one essentially, and you're going to go for another 30 years. But if your goal is eventually to move out of that house and make it a rental home and minimize your payment, that may be a positive change. But so it's kind of on a case-by-case basis, I guess.
Got it. So Pavel, I suggest you reach out to Ilya if you have any questions with a particular question, and that'll be addressed individually. And he's easily available on Facebook. You can just send him a message. I think that's the best way to do it. Okay. So let's say somebody wants to buy a house right now. What are the ways for them to do it?
Well,
somebody wants to start shopping for a house.
The positive thing is, COVID-19, the federal government has announced that you can now tap into your 401k funds if you have those available.
Interesting. Okay.
With the, I mean, you could always borrow against the 401k even before, if you're purchasing a first-time home. If you're purchasing your first home, I think there was a limitation on how much money was not taxed at the time, but now, since they've announced that the 401k funds can be tapped into for the emergency reasons, I think it's a good opportunity for some people to consider. If they don't have a down payment at the moment, they can probably rely on their 401k and get into that home now. That's one way. Other than that, I mean, just have a readily available 3 to maybe 5% down. Use gift funds from relatives or something like that, and still get a loan.
Excellent. Yeah. I see. So basically, guys, even though times have changed, but certain things still remain the same, and the way real estate is sold and bought is still the same. Just few minor changes that happened, and you should reach out to Ilya if you need to speak regarding mortgage, regarding refinance, or purchase. He will consult you and come up with the creative ways of helping you out. So that's just my take, and the reason I wanted to bring him up, because he helped my family, and he helped me personally to, with several purchases, and I'm very amazed with the work ethic and with the way things are done. Also, yeah, he's working with a lot of our agents at Nexus Realty, and a lot of them are happy. So he's the most knowledgeable guy I know. So that's why I highly endorse him for any kind of mortgage related questions to handle, So unless anybody has any other questions, you can bring them up now. If not, we'll be wrapping it up. So anybody else had any questions so far? No.
One just came up.
One just came up. Okay, let's see. Cost. Alisa is asking about the cost. What's typical closing cost?
Well, typical closing costs will be probably.
Alisa, is it closing cost for mortgage or for, for refinance or for purchase? I can bring her over and she can
I'll
talk.
answer more general. Purchase. I would say a typical closing cost would be, this is just the bare minimum. And again, it kind of all depends on the price and the loan that is taken out. It would be somewhere in about a $4,000 range. That would be a typical closing cost. Unless you are required to pay points or you want to pay the points down to buy the rate down. And then again, this is just the closing costs. There's other factors involved that's called prepaid expenses, and a lot of people get them confused and they kind of roll them into the closing costs, but it's actually the broader term is called the settlement costs, which consist of the closing costs and prepaid expenses. Prepaids are your taxes, insurance, per diem interest that you pay for that month, and things like that. Those could vary. I mean, the more expensive the price of a home, the more taxes you end up paying. So that could be anywhere from 4 to 5 to maybe even 6,000 extra. So sometimes the entire settlement cost could be as high as $10,000.
So she's asking 4,000 for how big of a loan, and she's also asking, is there any changes? Are there any changes compared to pre-pandemic?
Pre-pandemic, yeah, I see the question. Yeah. 4,000 is your typical closing cost for, I would say, anything up to even $1 million. I mean, your escrow fee, your title fee, your bank fee, your appraisal cost does not really change much. Again, this is the bare minimum. So I'll give you an example. So if someone is getting let's say $1 million loan, but they're not buying the points down, their closing costs are going to be roughly $4,000. Someone is getting a $500,000 loan, their bare minimum closing costs will still be around $4,000. But if that person, the one that's getting a $500,000 loan, wants to buy the rate down by 1%, they pay an extra $5,000. So their closing costs will be close to $9,000. But that's not a requirement. It's on a case by case basis. So it's kind of a broader question.
So, Alisa, if you're looking to buy, I suggest you contact an agent who will work with Ilya. And sometimes you can actually have your agent negotiate with the seller so that seller can cover your closing costs. It's been done before, and it's being done across the board. If you're looking for agents, contact our office. We'll be happy to pair you up with somebody who will work with you and handle this, on a professional level, so you will get your closing costs covered. But again, it all depends on the deal, depends on everything. But usually, sometimes you can ask a seller to pay, maybe 1 or 2% from the purchase price towards your closing cost. Sometimes up to 3%. So basically, if you're working with an agent, your agent can negotiate that. And sometimes your agent can actually cover that. So again, depends who you working with, but it's doable. Yeah. We don't have any more questions. Anna says, I need to jump on that refi. Anna, contact Ilya and jump on that refi if you need to. Things are getting very interesting nowadays.
Yeah.
Sounds good. So looks like it's already half an hour we've spent talking about it, and people are still interested. People are still here. Для наших русскоязычных слушателей хотели бы сказать, что сейчас очень интересные времена для покупки, и также Илья сможет помочь вам с рефинансированием ваших займов. Поэтому обращайтесь к Илье по всем вопросам насущным.
Спасибо, Паш, за community.
All right, guys. Have a good one, and stay tuned for future releases.